Hey guys, Boris from BK Forex. Welcome to our Forex weekly technicals for 9/30/10/4. Big week ahead. As always, trading foreign exchange on margin carries a high level of risk may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin. Seek advice from a independent financial advisor if you have any doubts. Well, this week was still very much tight ranges on everything that you can see. Let's take a look at the euro first and foremost, and then we'll take a look at the rest of the major pairs. The euro pretty much finding resistance exactly at this 65 level just as before. Got rejected off the level today, but certainly still keeping up its upward bias. We basically sort of have a more or less a bullish flag formation here. Definitely holding the 34.50, which is a key support level for the time being. And everything, of course, revolves next week. I think in many ways we're very chock full heavy with U.S. data and also the ECB meeting. And the key question is going to be, of course, does the U.S. data support a taper of the taper, beginning of the taper perhaps in October or maybe before the end of the year, or is the U.S. data really starting to slow down, at which point it means the Fed has zero chance of tapering, and that puts the dollar in a weak position and pushes us through. Ultimately, this 35.65 level very key. A break here could point us towards a 3700, the yearly highs on the euro. The countervailing force to that, of course, is Draghi coming out on Thursday, telling us that basically we have the potential that he may cut rates in order to bring the euro down. I think the European monetary policy makers certainly don't want to see the euro above 3,500 for too long. So you have these countervailing forces. That's why you have a lot of indecision in the marketplace. And technically, you see this indecision. I mean, look at this. If you were to basically look at this for the last pretty much week and a half, we've had a 100-point range. There's been no volatility. The only thing that we can think about from a technical point of view is that lack of volatility eventually is mean reverting, and therefore volatility begins to expand. So if there is ever going to be a chance for volatility to expand, it's certainly going to be next week as we go into all this event risk. So there's clear potential here, one way or the other. Generally, basically, whichever way we break the range is likely going to give us some directional view. So we'll have to see if the euro takes the upside and points towards 37, it takes the downside at 34.50 and points towards a move back down to the 3300s. Cable, on the other hand, looks a little more solid, very much testing the highs here, but also stifled here at 61.65. Potential here, obviously, for a double top. Although it got a big lift today by the fact that Carney basically said he doesn't see any further QE. Cable has a whole slew of fresh economic data this week as well. And that's going to be very interesting because if the data continues to rock and roll and basically show improvement from the month prior, very good chance we take out the highs here and pretty reasonable chance we take out the 63s. If, on the other hand, we start to retrace, if the data begins to show a little bit of a slowdown in the UK economy, then certainly this could be a potential for a double top and move back to the 60, and I think even potentially move back all the way out to 5,900 as the key level. The gap here is 58.50. That would be a very big move to the downside that would fill the gap and would require pretty negative UK data as the week progresses and more positive US moves. Speaking of the gap, the pair closest to filling this gap that we had a couple weeks ago is the Aussie, which is just definitely on its one-way drift to the downside. Rumors today that the RBA may cut rates on Monday night or sort of Tuesday night. Yeah, I guess it would be Monday night to us, Tuesday to Australia, on the assumption basically that with the Australian dollar so much stronger than where the RBA wants it to be, they're not going to wait around and lower rates. The Australian economy has definitely been slow. Data this past month has not been very good, and the fill of the gap much more realistic here. The fill of the gap here would take us all the way down to 92s, quite likely, especially if the RBA definitely cuts. We could have a big move to the downside. This actually brings the key point that all the Aussie crosses. If you look at Aussie CAD, which is to the downside, not nearly as much, but if you look at Euro Aussie, where's my Euro Aussie? Here's the Euro Aussie. Euro Aussie really starting to power up after a big correction off the 150, found support at 4,200, and now we're back up to 45s. Very reasonable possibility here if we have a cut in the RBA rate. The Euro Aussie could now come back out to 47.50, right? Take out this resistance over here at 46s, and possibly move all the way out towards the retest of the 150-100s. So certainly worth watching the Aussie crosses here, and to the downside as well with the Aussie yen, because that's been a pretty weak move over the last few days. You see it topping out around 94, and now we're almost back down to 91s. Support here in the Aussie Yens, let's rise around 90, right around here, right above this last swing high. So definitely worth watching. I think the Aussie crosses next week because that's certainly showing relative weakness, assuming RBA cuts. If RBA doesn't cut, we could have a big rebound here. So beware of two-way price action. Yen, which we kind of talked about tangentially, looking very weak. We've been talking about the fact that the yen refuses to kind of really rally up. We simply haven't been able to take out 99s, 100s. As a matter of fact, if you look at yen, you basically have a continuation of lower highs all the way through for the last month or so. Yes, 98 is being held right now, but if 98 is given, next support is 97. Next support after that, 96, and it could be very much a step kind of a diffusion move. This obviously driven in many ways by delay of the Fed taper. If we get weak U.S. economic data, delay of the Fed taper, we could have a potential for yen really unwinding all the way out to the 97s, 96s back again. So we have to watch this very carefully, but it certainly doesn't look good. Also, U.S. Governmental problems in the sense that if we don't resolve the debt issue and all the various things that are happening in Washington, D.C., that comes into the forefront next week as well. If that creates a sense of uncertainty about the U.S. economy, also going to press on the yen. And, of course, at the same time, press on all the yen crosses, which is why, as I said, Aussie yen is the weakest of the yen crosses. But even if you were to look at CAD yen, for example, which is starting to fill the gap here, is starting to kind of also come back down towards this 94 level. And even if you were to look at euro yen, where's my euro yen? We're definitely coming off the tops here. We are finding support here at this 32. The 32 is given here on the euro yen. We definitely have a chance to come back all out to the 130s. So there's a lot of very interesting two-way price action going on here. Quite a lot of it contingent, obviously, on the U.S. data, and whether it's soft or better than expected. Better than expected is likely going to stifle all of these rallies in the anti-dollars and pretty much top them out. So the highs that we've made this week could very well hold, and we could have essentially double tops in pound, in euro, and a further decline in the Aussie. On the other hand, weak U.S. data could put us right back to fresh highs on the euro, on the pound, and take the dollar yen all the way down and drag the yen crosses with it. So I think those are the key big themes next week. Very big week ahead after a very, very quiet, non-volatile week. Next week should have a lot of fireworks. I wish you guys the best of luck in investor trading. This is Boris Schlossberg. Over and out.